Welcome to the Ring Road Revolution. We're here to uncover the best investment areas in Islamabad and Rawalpindi for 2026. This is your ultimate guide to high-return opportunities. We'll show you how to capitalize on this once-in-a-decade chance. Get ready to transform your investment portfolio. The Rawalpindi Ring Road, RRR, is a 38.3-kilometer masterpiece transforming the Twin Cities. This 6-lane corridor links GT Road to the M2 motorway, drastically cutting travel times. With over 80% completion, the RRR is the primary driver of the current real estate boom, paving the way for unprecedented growth. Capitalize on the pre-completion surge before March 31st. Infrastructure completion typically triggers a 25 to 40% jump in property values. Major developers are announcing significant price revisions effective at the end of March. The visible on-ground development is attracting massive capital, closing this window of opportunity soon. Our first top pick is Faisal Town Phase 2, the gateway to modern living. Its strategic location is adjacent to the Ring Road and M2 motorway interchange. Sector X is the biggest beneficiary with projected 25 to 30% annual returns on a 5-marla plot. It offers seamless access to the new airport and central Islamabad hubs. DHA Phase 4 is the gold standard for secure, premium, and connected investment. Direct access via dedicated RRR interchanges slashes travel time to Islamabad. Riverview North is the most sought-after block for one-canal plots. DHA's brand ensures unmatched security and significant appreciation for long-term investors. RUDN Enclave boasts the 0 km advantage at the Adiala Road interchange, making it a major beneficiary. This positioning means immediate access to the Ring Road, significantly reducing airport travel time. The overseas block offers high potential and rapid development for medium to long-term investors seeking capital gains. Our ROI analysis provides a strategic comparison. Faisal Town 2 offers the best balance of low risk and high returns. RUDN Enclave leads in pure percentage growth potential, albeit with medium risk. DHA Phase 4 remains the gold standard for security, offering a reliable, very low-risk investment. Targeting the 5 high-growth zones near RRR interchanges is crucial for maximum capital gains. These include Thalian, Chakri, Adiala, Chakbeli, and Banth. These strategic 0 km locations are seeing the highest demand for residential, commercial, and logistics purposes. The Ring Road is transforming into a commercial goldmine, the new artery of the Twin Cities. New business districts are emerging, offering 1.5 times higher ROI than residential plots. Look for logistics hubs near Thalian and Chakbeli, as corporate offices shift here to escape city congestion. To secure your success, follow this investor checklist. Verify the NOC status with RDA/CDA before investing. Visit the site to check development pace and interchange proximity. Invest in blocks with upcoming balloting for immediate price jumps, and always consult reputable professionals. The future vision is clear. The Ring Road will integrate with the CPEC Western Route, becoming a regional trade hub. This marks a historic shift in the urban center of gravity toward the west and south. This infrastructure is the new backbone of a modern metropolis, creating a legacy for future generations. The Ring Road opportunity awaits. This once-in-a-generation project redefines urban connectivity. Act before the March 31st price deadline. Invest wisely and secure your future. The path to prosperity is paved by the Ring Road. Subscribe to Zareen Axis for more real estate trends.